before I start with the introduction, I would really like to ask a question in introduction, right? Can you please introduce yourself and in one line tell about what do you think the business expectations have evolved in the new digital savvy world?
Hi there. My name's Simon. I'm the CEO, one of the co-founders of Frankie One. What we do is an aggregator for identity and fraud. So if you're familiar with KYC, AML, having to onboard an SME, we try to assist and try to make it faster to onboard. So what I would say to, as far as digital transformation and assisting, is try to make it easier to onboard. If everyone's had an SME loan before or gone through the process, it is not typically a fun experience. That's what we try to help with.
Hi, Alan Beattie, too many years a banker overseas. I'm working with Trade Ledger now. And what Trade Ledger does is try to make that process of accessing capital and lending for SMEs, making that simpler and supporting the lenders in their process of acquiring and retaining new customers. In terms of your question, well, we'll talk about it in the next half an hour, but I think, in a nutshell, we need to bring to business banking and the SME world what has happened in the retail space, in a nutshell.
Hi, I'm Shilpa. I'm a financial services industry architect with Oracle. I work with these strategic clients in APAC, which covers the big four banks here in Australia. And I try to help them create value with their investments when they partner with Oracle, and that can be across data, applications, industry solutions, and platforms. Most of my 20 years have been in the finance transformation space, that is back office, a bit of risk, reg, treasury. But in most recent years, I've started helping banks with the front office and digital transformations with legacy modernization and innovation. In terms of what I've seen in terms of business banking expectations evolve, to Alan's point, they're expecting the same experience as a retail customer. And we'll discuss that further, but in a nutshell, I'm also seeing that they expect the banks to go beyond traditional banking and start providing some adjacent capabilities to help with their business. More on that to come.
Yep. My name's Sarah Bolt. I'm a product manager with Prosper. Prosper is Australia's #1 online lender for small businesses, and has a mission to achieve some of the similar stuff we've already been talking about transforming the way small businesses experience finance. And yeah, I'm there to help them build the products to take those to customers. And my background has been in technology, in particular data technology. And yeah, I agree wholeheartedly. It's about bringing those consumer experiences into the business banking, and particularly for small businesses, their expectations are very much aligned because they often are, individuals who are managing their personal finances with a different tool set.
Yeah. So I'm Rohini. I work for Temenos, and at Temenos we do digital and core banking on cloud as a composable banking. And what we've seen is expectations not just from the retail consumer side, but also from the bank side to understand the small businesses has evolved. They want to understand data better so they can lend better, they can service them better, and they don't want to use people to do that anymore. No more RMs. So we're seeing a lot more automation, and they want to give that capability back to businesses to manage themselves. So more automation, more self-service, but for small businesses. So I see we have a lot more access to funds here. So Frankie Ones from Prosper and Trade Ledger, they all talk about access to fund. So I want to know is why do you feel the market has been so slow in getting SME sector access to funds? Right? Why have been we making it very hard for our small businesses to access their funds and get credits?
Well, I'll give it a go because as a banker, I suffered this on the other side. The problem we're trying to solve, I would bucket in the three C's. It's the cost of on a per customer basis, the cost of acquisition, the cost of retention, the cost of monitoring a small business customer is excessively high, and that has been exacerbated in recent years with the second C, which is the compliance burden. as I always like to say, nobody launders money in their own name. Everybody sets up a small business, and that's the way that some nefarious activity goes on in society. So society regulators are looking to the financial institutions and the NBF, the non-banks, you know, and looking for support from the likes of Frankie One to really understand who it is that they're banking, because you're not just an individual, you've got ultimate beneficial owners, you've got directors, you know, what are the contracts that are written between buyers and suppliers of the customer that you're looking to bank? And the third one is coverage. How do I reach out to the tens or hundreds of thousands of SMEs in the community today without having to rely on boots on the ground and relationship managers? So that's the problem statement I think we're trying to, in my opinion, that we're trying to get across.
So do you want to add on to that?
Yeah, I guess I add to that. So, yeah, I was going to say that there are two sort of interrelated challenges. And one, yeah, is there's just been, relatively speaking, less choice driven by those factors. And, you know, compounding that, like we're still seeing for customers, you know, lengthy applications with long wait times for decisions, and that makes it really burdensome for small business owners, for example, to shop around. If you have to provide reams of data and then wait many weeks, that makes it harder, so less competition in that space. This is something that Prosper sort of pioneered many years ago, is a bit of a step change in this area by leveraging tech that was there at the time around screen scraping, etc., to try and cut down those times and give that back access to data. We've heard a lot over these last 2 days that the likely next big leap in that space will come from the CDR, but we also heard in this room earlier today that, you know, small businesses in particular, there are some gaps in that framework at the moment for accessing that, which makes, you know, driving that change a bit slower than in the retail space.
Simon, would you like to add how you're seeing in the market?
I'd agree with everything that's been said. Ultimately, I'd say it's complexity, right? It's harder. It's so much easier for an individual, which obviously commonly gets compared to. And if it's more complex, takes more time, more money, etc.
So Shilpa, you work from Oracle, right? So you work with large banks. How do you see the experience for banks reacting to small vendors like Prosper, Wiser, Judo Bank coming into market?
Yeah, thanks, Rohini. So the one thing that we saw during the pandemic was that the SMEs had to move businesses into digital heavily and very quickly. And we also saw how critical that SME segment was to the economy. And these expectations around, you know, wanting the same experience as retail customers, wanting access to cash flow, having certainty to that decision making and faster decisioning, were all challenges that big banks, you know, have been facing to provide seamlessly. And these became the opportunities that fintechs and, you know, companies like Prosper and Wiser have absolutely capitalized on and, you know, tried to provide that gap. So the way I see banks reacting to that phenomena is in three ways. You know, one, which is the most prominent reaction, is that they want to be partnering with these fintechs. Two, they're either acquiring or directly investing, you know, in these fintechs that we heard from all of the big four CVCs, you know, last evening. Three is a less prominent phenomenon now in terms of competing and trying to build and, you know, a competing capability out by themselves. And in terms of that partnering, I'm seeing banking as a service, banking as a platform, both models evolve, you know, pretty nicely. And those partnerships are like, you know, you look at Westpac Society One, ANZ Frollo, CBA Unloan that we saw yesterday, et cetera, all around us. And not just, you know, Prosper and Wiser, but all of the fintechs that we've seen and heard from in the last 2 days, you know, are getting similar reactions from the banks. So the opportunity is absolutely ripe for fintechs. I would add that having had some conversations with the executives at banks in this space, what I hear them say is that they love the agility and creativity that the fintechs bring, but they still in some way, shape or form rely on organizations like Oracle for the robustness of security and delivery. And so I'm seeing another trend that, you know, I expect more partnerships for fintechs and big techs to start taking place. for that faster scale and velocity, for superior unit economics that Alan spoke about, and for performance and resilience dependency. I know for sure that Oracle's been leveraging its decades of financial services experience, trying to launch a new cloud that's more fit for this kind of collaboration, fintech and innovation. So I think it's ripe with opportunity.
No, that's a great point. So taking a little bit of change, so we saw Judo Bank as a unicorn bank in the region, right? So the billion-dollar bank in the last few years. How does Prosper feel about that, and how do you next steps to compete against those kind of vendors coming into market?
Yeah, so we probably operate at a bit of a different level in the risk space, so serving different customers from a bank like Judo. And if you want to hear more about how sort of fintechs are trying to differentiate themselves from the banks, then I recommend the next session in the next room where one of Prosper's co-founders will be talking about that very topic. But I guess from a sort of tech point of view, I think we're really on the precipice of seeing a lot of that creativity unlocked. So for companies like Judo, for Prosper, because the services that have come to the fore over the last few years, the tech services, some of which I'm sharing the stage with now, and many of which are represented at Intersekt, enable companies like Prosper to focus on serving the needs of their customers without having to build out the fundamentals themselves in-house, which is a real challenge in the sort of, tech resource constrained world that we live in. So being able to leverage, banking as a service platforms, data as a service platforms, specific capabilities around, AML, KYC, that enables companies to focus on what are their core differentiators, how they serve their particular customers, without having to spend so much time, establishing those fundamentals.
So that's a really good point. You mentioned data as a service and the data. So today's trend, we have seen a lot more about CDR, open banking, open data. So open data is to bring more competition. So my question on business side, it's currently available for retail, and it has a very slow uptake. How do we see the transformation enabling the next stage of business banking through this data and the open platforms? So do you want to start, Simon, on that?
Happy to. Slightly controversial opinion maybe, though open banking and the like has been touted as a potentially a big shift. We haven't necessarily seen that in retail. I probably wouldn't necessarily expect a major shift for business banking. I think if you look at SME lending in general, it's quite a straightforward model. If you can get more data to make a better decision, you should have a competitive advantage. And then there'll be different distribution, accesses, coverage, cost, etc. Now, is open banking going to give you more data sources? I don't necessarily think so, because you can actually get that today through scraping and other means. So if you're not getting further data, more data sources to enrich your decision, I don't necessarily think it's going to help on the lending side. So that's just my view. Might be slightly controversial, only because this open banking has been very much touted as what the whole industry should get behind. Now it's going to change the world. I don't know. Maybe I'm alone, right? So I actually think there's going to be very different things. It's going to be the enabling technologies, right? That's actually going to help the 3 points that Alan mentioned. How do I reduce my cost? How do I reduce my compliance? And how do I reduce my coverage? If you can focus, that's the problem. And then if you focus on those 3 pieces, I think that will have an effect much more on the SME lending.
So I'll be a bit more positive here. We wanted to be slightly sort of, no punches there. Look, I think we spoke about the challenges, and we've seen retail banking, consumer banking progress in terms of its use of data and making it much more accessible. I think with more data being accessible, but not just more accessible, but in a timely fashion, coupled with the data analytics, coupled with the ability to sort of make informed decisions, or computers, not humans, making informed decisions around the data, then you can start to solve the problems that the business banking have with, you know, it's trillions of dollars of funding gap that is out there that is not being served because there's an abandonment rate, they don't know who to go to, they don't know how to get access to funding, and, you know, the banks and the non-banks, particularly the legacy institutions, are phenomenally slow. And I used to work for one. You know, 44 days to turn around a loan application is ridiculous. It should be, you know, 4 hours, really. So that's where we need to get to. And on your point on CDR, GDPR, and, you know, the data and the ownership of the data, I have a, you know, I don't dream about this, but, you know, I do believe that if you put the power of the data into the hands of the owner, the institution, and as Simon, I think, was saying, it's phenomenally complex when you look at businesses over individuals. You could ultimately get to a point where you put up that data and there's a bidding process for your business. Because you say, here's my data, here are my financials, these are my UBOs, this is my company, these are the contracts that I have, these are my, you know, this is my sales ledger. What are you going to give me? That, for me, is where you put the power back into the demand side and you make it instant decisioning for what is required by the consumer, the customer, business customer. And that will keep the regulators happy because there's a suitability element to that as well. Right product, right place, right price, right time.
So that's not just about the data, that's understanding the data. So technology is not going to be just having the data, but also how do you understand, analyze the data faster to give better results. So where we are seeing is understanding data is quite hard, right? If you have a tractor, how do you value that tractor as an asset, right, from farming point of view? So coming from that point of view, how much data and how data is going to be used is currently, we're all talking about the positives. When does it start becoming negative and banks starts deciding against you for using that data? So currently banks don't lend you mortgages if you have after paying your account statements, or your insurance go void if you bought smokes or you bought to cash out on, I don't know, in Crown Casino. When does that data become negative and the use of data become negative?
I've got one word answer to, I mean, a one sentence answer to that. I mean, ultimately, if you're taking risk out of the system by having data that demonstrates that actually there's something wrong with, or there's something inherently problematic with the information that you've got, then that should take everybody to a better sort of higher plane in terms of compliance, in terms of good banking and good business practices. That's my view.
Shilpa, what do you like?
There's another angle to this. Like, you know, as a SME, if I was going to open a cafe, and if I approached a bank for a loan, and if they were able to look at the data analytics that they have and tell me, you know, businesses like you in that suburb have this kind of a footfall, this kind of a working capital requirement, and this kind of a revenue profile, you know, that is gold as information to a SME starting out and seeking kind of, you know, funding for that. So the application of data is basically the kind of, you know, the power. And I agree with Alan, data is not bad, you know, how it's utilized, how it's used, transparency. It only ever leads to better lending practices, if nothing else, right? So,
yeah, I agree. And I think some of it too is as we like cross into this world with more and more access to that kind of information, there's also an adjustment period to understanding what really matters in that. So like the buy now, pay later example, I think everyone's still understanding the implications of that and understanding what that means for customers. So there may be a more conservative reaction up front before we understand how best to use that data and what it means for the individual as well.
Sorry, go on, Nala.
There's another side to buy now, pay later, right? There's sell now, receive later, right? And that gives, I mean, that the ability to finance that receivable is a very important element to the working capital requirements of a business. And I think, you know, we've been spending a lot of time talking about lending. It's not just about lending. I mean, if you're a financial institution and you're supporting the payments and you have the account activity of a customer and you see that they're in Australia but they're getting a lot of US dollar invoices, you should be hitting them up with FX spot prices, FX forwards, immediately. As soon as you see that data, offer them something that adds value to their business. And it's not just lending.
To increase stickiness, right? That increases that you understand your customer better.
Yeah.
So Alan, on that point, right? Trade Ledger is a global organization. So what do you see in global markets that is not available in Australia today, and where is the market going?
I suppose I've got two answers to that. It's not just about Australia learning from overseas and vice versa, but we've already talked about bringing what consumer banking has done and bringing it into the business banking world. That's the first thing. The second thing I would say, and I have been a banker in 11 countries, so seen a bit. There is too heavy a reliance here in Australia on term loans, you know, fixed asset secured lending that is 5-7 years, and it's old style banking is the way I would put it. We should be looking at the transactional activity of the client, of the business customer, and like Prosper does and others, and what we support at Trade Ledger is understanding that transactional flow within a business, the ledger, the AR, the AP within a business, and lending against that, offering services against that, because that is the underlying business that your customer has, not that you're lending them 7-year money against a factory. That's what I would say Australia needs to get further up the curve on.
Yeah, and I think we do see examples of that, and this is sort of a counterpoint to yours before, Simon, about how that fast access to data can unlock those sorts of new opportunities. Like we see players like Square and Shopify, because they have that access to the income that customers have. I mean, they have new products, new offerings now, where they can make decisions, proactively. They can make offers proactively to customers. But, one of their pieces is that they don't even have to rely on the individual credit history of the customer. They can rely solely on that information with a related sort of business model. So I think that does kind of introduce more competition, and maybe more data is still a good thing.
Simon, would you like to counter that point?
Well, a bit controversial, Simon.
We decided there'd been too much agreement at this conference before trying to drum
I want to make it a little bit more
up.
entertaining.
Yeah.
But no. I think it's kind of the point where you're coming from is additional data sources, right? So then you can actually change the way that you lend, whether it be secured, and you could argue you had a supply side, it was laziness. If you can get a asset-backed lend, it's easy, right? But then as more competition comes in on the supply side, as you have more access to data, whether it be some of the names, the Shopify's, etc., of the world that you can leverage, Wayfire, etc., then you can actually have more creative lending, faster lending, because the problem is not the market size at all in the SME lending space.
Yeah, agreed.
So I think finally I would want to open it to the people here. If there's any question for the panel. I do have we answered a lot of questions. So I think my final question is, what kind of architectural trends are going to be helping fintechs to open and partner with banks and banking and non-banking lenders, as well as looking at the servicing side? How would you see that future going with the new platforms? Shilpa, do you want to?
Yeah, sure. So as the architect on the so one thing, there's acknowledgement in the ecosystem that not everything can be done by one entity alone. And that's basically driving the trends around opening up those architectures to enable interchange between different entities. So you see microservices-enabled architectures, you see container-based deployments, open banking APIs, to the extent that open the interchange, between entities. We're all kind of, considering these aspects very central to providing that end-to-end, value chain. I know, even big old tech companies like Oracle, we're basically transforming and redesigning all of our application stack, keeping this new model in mind, whether it is opening up the cloud infrastructure for more, open banking and interchange and fintech collaboration, or it is, even redesigning our legacy application stack to fit into more container-based deployments and microservices-based architectures. That is a trend that's happening, and those are the architectural building blocks that are required to open up this ecosystem. For Oracle, I would just say data is in our DNA, and we are buzzword compliant. So you basically kind of talk of something, and we have it
Fill in
some
that
way,
blank.
shape, or form. Servicing side, I think Alan and Simon can talk more to that.
Servicing is complex because it's it's an in-life sort of capability that you have to offer. The opportunities are endless in terms of early monitoring, being able to predict and understand and A, reduce your risk, and or B, hopefully even better, offer up something that the customer might need in terms of risk mitigation or a change in the lending structure, the change in the look of the balance sheet. So, and technology and the way that you architect the solutions with your technology can go a long way to improving that sort of that relationship, and then that of course creates enormous stickiness. And actually, we're working with a global institution in the UK and talking to one here in Australia about this very need to have that ongoing servicing capability on our platform.
I agree with those points. I'd also say, if the question was how is it going to be, truly change going forward, I think standardization, or if you can outsource the undifferentiated heavy lifting, if you can take a technology solution, whatever piece is, in SME lending there is 10 pieces before you get a loan, and you can outsource, I think, close to 7 of 10 of those. One of those is not your credit decisioning, but, as far as actually what you're doing, but I think there's different modules that you can outsource, and if you can find someone that has done that 100 times before and it is undifferentiated, whether that be the KYC ML part, whether that be the distribution part, if you can outsource that, you can move faster and you can usually do it cheaper, and you have a better chance of having a competitive advantage.
So thank you. I think we are right on time. Thanks a lot to the panel, and thanks for listening.
Thank you.
Thank you.